Good morning, everyone, and very welcome to all of you joining us today for this webinar, Certified Efficiency Energy, Europe's new bankable resource class. My name is Lina Konstantinopoulou, Executive Director of the Sustainable Energy Finance Association, and I have the pleasure of moderating today's session. We have a really exciting agenda ahead with insights from the European Commission, financiers, energy saving providers. Let's move to the second slide, Calvin, where we have with us Paolo Bertoldi, Senior Expert at the European Commission Joint Research Centre, John O'Rourke, Director, New Energy Group, Philip O'Connor, Head of Energy Service Spinergy, and Eduardo Brunet, Spain Director, Green Finance Institute. Before we begin, a few quick housekeeping notes. This event is being recorded. We will also be taking a few screenshots and photos during the session for communication purposes. Please keep your microphone muted and your camera turned off throughout the event to ensure good quality purpose. And of course, you are more than welcome to post your questions or reflections in the chat at any time. My colleague Kelvin will be in the background collecting your inputs, and we will also bring them into the discussion during the discussion later on during the Q&A. Now, before we start, I just want to give a short introduction. So we will be very much interested in we are very much interested in having you in our event. As we all know, energy efficiency it is clean, cost-effective, and immediately available. We call them the Europe's first fuel. Yet, of course, investments are continuing to fall short of what is needed. And of course, we know that we have quite a lot of barriers, and that we need to make sure that we are we solve them. We have split incentives, data gaps, financing barriers, fragmented standards, and lack of independent validation. So this is precisely the gap that the GearUP Consortium is trying to achieve. And importantly, this aligns, of course, with the evolving EU policy landscape, the ED, Energy Performance Buildings Directive, which both emphasize measurable results. This is the digitalization. And to start with, we will hear from the European Commission's Joint Research Centre, Paolo Bertoldi, who will give us the floor, of course, to the first presentation. Paolo, the floor is yours.
Okay, thank you. I try to share my screen now.
We are sharing your screen, Paolo. It's
yeah,
we have it already.
Okay, thank you so much. Very happy to be with you today to this very interesting webinar and learn more about your very timely and relevant project for promoting energy efficiency. And my short presentation would like to emphasize the importance of monitoring, verification, evaluation, and certification of energy savings. Next slide, please. So we know that energy efficiency is important. It's part of all the European European policies for energies, in particular the Green Deal, the Repower Europe, and specifically with some important directives like the Energy Efficiency Directive and the Energy Performance of Building Directive. It's been recognized as the first fuel of our economy, but still there is no real energy efficiency market compared to other fuels like fossil fuels or renewables. Next slide, please. And we know that we have energy saving targets, so the energy consumption in the European Union as a whole and of each member state should decrease to the so-called 2030 targets, which are reachable, but only if all the policy are well implemented and if a market for efficiency will finally become alive and trigger a lot of investment. Otherwise, we don't go down to the needed level of consumption. Next slide, please. So we all know the benefit of energy efficiency. It's no-brainer. The reduction of energy cost, the improvement of energy securities, and many other societal benefits like reduction of local pollution, greenhouse gases, better environment, and better buildings. Policy are very important to stimulate projects. However, we cannot always rely on policy. We should create a market that the policy will basically stimulate, create, regulate. And the other problem that we also face in efficiency is that there are many actors from citizen, household, investors, energy service companies, one-stop shop. So it's very fragmented compared to, I don't know, the fossil fuel sectors where there are there are only a few players compared to efficiency. And then efficiency is as a value, so should be financed on the base of this value over time. And as I said, it's important that policy create a level playing field where all actors can access to finance, and there can be a truly effective deployment of energy efficiency solution resulting in energy savings. Next slide, please. This is just history, but just to tell you that I'm very aligned with the goal of your very interesting project, because already in 2013 I published with some colleague a paper just saying why we don't create at the time a feed-in tariff for energy savings. Every time that you save a kilowatt hours, you can get an incentive as if you produce 1 kilowatt hour with the photovoltaics. And we know the feed-in tariff or that has been running for many years for renewables, promoting them, and now are basically a market system to promote renewables from incentive to market. So the same idea was here presented, and I think it's still very much the question. How can we recognize the value of save kilowatt hour, and how can be eventually incentivized with public policies? Next slide, please. So the well-known barriers for when we come to financing energy efficiency projects are the fact that very often the financing, the bankers don't understand the value of save energy. They don't believe it. They are not familiar with it. It's not tangible. I think everybody can go and see a photovoltaic panel can be used as a guarantee if you don't respect the repayment. I lost the slide. If you don't respect the payment, it can be taken back. But energy efficiency is intangible. Sometimes it's just some equipment installed. Sometimes it's insulation on the buildings that can be taken off. And very often it's long payback periods. And then we come more to the technical side, where the way in which we estimate and value the energy savings is difficult. There's a lot of uncertainties, and therefore it's very difficult for the financier to get to know it, to appreciate it, to also to understand that it can deliver. And this is maybe also another barrier is the historical failure. Some efficiency project would fail to deliver the promised savings. Next slide, please. The MMV methods are complex. They need expert engineers, and they are also expensive. And these calls basically for common tools to evaluate the efficiency and the energy saving resulting from energy efficiency, and also the risk associated. We know that it's very difficult to move from kilowatt hours to cost savings, because there are a lot of variables, like the price of the energy source that we are displacing, the inflation, the fact that human beings interfere with the technologies. So you can have wonderful, high efficient buildings, but then the occupants change the set points, or like a very high temperature in winter and cool temperature in summer. So the predicted saving by the model, by the design, not always materialize. Okay, we can move to the next slide. So what we propose is basically to put beside a evaluation of energy savings following, for example, the IPMVP protocol, which is now becoming more and more popular and like the global standard, also the evaluation of the risk that energy efficiency project entails to be transparent and to attract more investment. Because if we don't quantify the risk, we always remain in an area, in a shady area, where financiers say, I don't believe this. What happens if? So if there is a good system to identify this risk and attach to a project, we are more likely to show that these risks are reasonable, are manageable, and can therefore attract more investors. So as I said, there are a lot of variables that have to be included. Let's imagine, for example, an industrial energy efficiency company, and let's see that we do a project where it has a 10-year payback time, and either this company in 5 years' time close down because they relocate, or the production level change from the quantity now to the double production of goods that this company is manufacturing. So the energy saving are not there because the consumption, so there is no way to pay back the initial investment. So all these variables have to be included, and otherwise, say, we will not create a fair market. Next slide, please. So as I said, the efficiency evaluation is a complex, and basically need expert, need standardized methodologies, should focus basically on the risk and reward, recognize there is a certain risk. So the mantra for me is identify, quantify, manage the risk attached to a project, not just say bluntly, we will save 20% of energy. Yes, okay, you may, but what happens if the energy price goes up, go down? What happens if the operation changes? And this is very important topic, and I hope that in your project, besides certifying energy savings, you can also assure the quality of this certification from an engineering technical part, but also from a financial risk perspective. Next slide. So coming to the conclusion, I think we have the solution, and I strongly believe that your project you presented today is part of the package solution. So for me, the solution calls for education and capacity building, training of financiers on energy efficiency economics, on the financial part, but also on the technical part, or creating more trust by the financiers on the engineers that perform the efficiency evaluation. As there is very often in an energy efficiency market, third party would implement efficient project on behalf of client, and in particular, I'm referring, for example, to the ESCOs, which is a very important delivery mechanism for energy efficiency, most probably not in the residential sector, but in the service sector, in the public sector, in the industrial sectors. And we want to see more ESCOs operating in Europe and deliver more savings. As an ESCO, make his own estimate of the energy savings, financial savings, risk, fine. But on the other side is a client they would like to have, will have a contract with the ESCO, so must also be assured of these quantities, because otherwise it will embark in a project where it cannot claim, for example, the savings that the ESCO promised have not materialized, or under which condition this saving will materialize. So I call for more third-party independent verification, which can be an intermediate, independent from the ESCO, independent from the client, but assuring that the due diligence has been done and this saving, as calculated perspective in the contract, are realistic under certain conditions with certain level of risk. Of course, we need also standardized MMV protocols, and we are very lucky to have the International Performance Measurement Verification Protocol, IPMVP, which is, I think, is international basis on which national or local protocol or company protocol should be based to avoid reinventing the wheel and having a common language to dialogue it and also to create the market. Innovative financial mechanisms are needed. Sometimes the traditional loan is not enough. There could be, as I say, we're looking more to pay for the saved kilowatt hour or having pay per performance, which is very similar, not just because you install technology, but how much this technology will deliver. Energy service agreement or energy performance contracts, green bonds, and other instruments, also for efficiencies. And as I say, last but not least, risk mitigation tools that can enhance the market, like guarantees from third parties, for example, public guarantees, credit enhancement mechanism, insurance product design, especially for energy efficiency project. And I think with this slide, I come to the conclusion. Yes. So again, energy efficiency should be always the preferred mechanism to manage our energy future. The principle of energy efficiency first, which is now enshrined in European legislation. Energy efficiency very often is a common sense decision and a smart financial investment. But it still needs better tools for calculating the value and uncertainty of the plan efficiency. And I put my emphasis again on this statement. Efficient evaluation goes beyond the physical or engineering quantification result, addressing the financial uncertainties associated with the avoided cost. So it's very important to assess also the risk and what is not known and how to mitigate this. The efficient evaluation must acknowledge risk and seek a way to quantify and manage it without ignoring it. And this enhanced evaluation and certification of efficiency project will certainly increase the market and increase investment in energy efficient project. This is what all our policymakers would like to see. Thank you very much for your attention.
Thank you very much, Paolo, for really framing the challenge and also showing that how measurable performance is really becoming a must right now for energy transition. I would like now to move to John O'Rourke, Director of New Energy Group. Well, he will explain how GearUP model translates goals into practice, let's say.
Thank you, Lina. Good morning, everyone, and many thanks for joining us this morning. And special thank you to Paolo for his contribution. We are thrilled he could join us this morning, and Paolo has really framed a lot of the issues that GearUP is being set up to address and to hopefully manage. So what is GearUP? So next slide. So what is GearUP? So the Life GearUP project, which stands for, by the way, Generating Efficiency as a Resource, represents a key pillar and enabler in the conceptualization of energy efficiency as a measurable, transactable, and bankable resource. This is a big step forward for energy efficiency deployment in the built environment, in that it addresses core market barriers such as the landlord-tenant split incentive, provides for a solid commercial support mechanism and transaction structure, but most importantly, but especially in the public sector, has the potential to facilitate indisputable off-balance sheet treatment for long-term performance-based contracts. And this is really important for member states with pending goals. If adopted, your building monthly energy bill will have multiple energy source line items. So you'll have one for network or for grid energy. You will have a second for possibly rooftop solar, but now you'll have a third for efficiency energy. The GearUP body of work will support the transition of avoided energy use, or what we've known in the past as energy savings, into an investable, long-term metered energy source, and that would be efficiency energy. And this is the basic concept of GearUP, and this is what GearUP is setting up to deliver. Initiated in August 24 and running through September of 27, the project aims to pilot in 2 countries, Ireland and Spain, Dublin and Madrid, as well as launch extensive communication and exploitation campaigns in both the Netherlands and in Denmark. The Life GearUP project offers a practical finance solution to one of Europe's most persistent energy challenges. How do you make energy efficiencies investable at scale? So for policymakers, it's a lever for delivering on EU decarbonization goals without unnecessarily increasing the fiscal burden on member state governments, especially in today's environment of ever-increasing competition for capital by different departments within those governments. For investors, it's a gateway to a new green asset class that offers market risk-adjusted returns. And market is always looking for market risk-adjusted returns. The GearUP transaction structure transforms the perception and the management of investing in energy efficiency from a very simplified cost-benefit analysis, which really translates in practice into short-term, low-hanging fruit, single interventions, into a long-term investable asset class of comprehensive interventions. This would be underpinned with certified metered efficiency energy and the supporting contract vehicles, unlocking EE's full potential in Europe's transition to a climate neutral economy. Next slide. The project team, just a little bit about the project team who's carrying this out, was really carefully selected. I will add that they are all CIFA members, except for maybe Aristotle. Each team member brings its own unique experience and functional expertise and intellectual capital to the team, allowing it to avoid silo-based outcomes and echo chamber nonsense. And we tend to fall into this, especially in the realm of energy efficiency. In fact, I would point out that CIFA was formed as an association specifically designed to tackle difficult market barriers on an independent but all stakeholder representative basis. And they are, for this project, CIFA, the Sustainable Energy Finance Association, Jones Lang, based in Belgium, Jones Lang LaSalle, based in Dublin, Green Finance Institute, Spain, based in Madrid, Aristotle, based in Thessaloniki, Pinergy, based in Dublin, Ireland, New Energy Group, based in Dublin, Ireland, TNO, which is based in the Netherlands, and Joule Assets, based in Italy. Next slide. So who are we? As part of the project, we're setting up a pilot. And so I want to talk a little bit about who are the pilot project participants and what do they bring to the table relative to the pilot. So first up is the building owner. Very simply, they provide the building. You need a building. Next is the efficiency energy developer, or EED. And the EED signs an energy tenant agreement with the building owner, which bestows upon him all the same rights as other building tenants have, but as well as the right to harvest, own, develop, construct, and maintain the efficiency energy interventions for the term of the tenant agreement. Typically, for a comprehensive intervention, we see this being anywhere from 10 to 15 years. Next up is the retail energy provider, or REP. The retail energy provider provides the metering infrastructure as well as the billing and settlement services. And when we get in another slide or two to the transaction structure, that will become more apparent. Then we have the building owner agent. And in a lot of cases, especially for Class A buildings and large commercial buildings in large urban settings, most of these buildings are managed by professional property management groups. So they typically facilitate end-to-end service and delivery management on behalf of the building owner. And these are a very important piece of the solution, at least in the commercial office arena. We have the building tenants. They pay for the efficiency energy through the landlord service charge account. 9 out of 10 times, this is a budget neutral consideration for tenants. And some of our initial investigation leads us to feel that in the overall cost of energy, when you introduce efficiency energy, will be end up being less for those energy tenants. And lastly, but not least, and to very much to echo Paulo's point earlier, you have the independent certification body, CEFA, who provides the recurring verification and certification of the metered efficiency energy. This is really important because, look, to be very honest with you, a lot of the complaints in the past have been that, for English speakers, they'll know this, but it's the fox in the henhouse. So the same people that are out there developing and delivering the savings, they cannot be the people that are reporting on the actual. That has to be independent, and CEFA is very well positioned to fill that role. And a fairly significant body of the work here is building that data infrastructure and that reporting infrastructure that so CEFA can deliver on that promise in the future. And next step, our next slide. Okay, this kind of gets to the meat with it, and just hang in there with me as I try to walk you through this. So this slide really aims to define the participants and their interrelationships, as well as highlight the contract, the money, and the data flows. And by the way, this was quite a job to get this on one slide, I might add. Let's start on the bottom left with the efficiency energy developer. So this structure, it's important to note that this structure was designed with a specific project in mind in Dublin, Ireland. And as such, the EED, or efficiency energy developer, was contemplated to be an ESCO. Now, but having said that, it's important to note that the EED can also be the owner's agent, if they wish. It can be the owner. It can be a financial fund or an SPV with any combination or all of the above. So you're not locked in. Whatever the ownership makeup, the buck stops here in this transaction structure. The efficiency energy developer will obviously need an energy tenant agreement, and that's executed with the building owner to ensure that access and authorization to build, own, operate, and maintain the efficiency energy plant and/or interventions in the owner's facility. So in return, the developer will pay a monthly tenant rental fee to the building owner for the duration of the contract term. This is highly unusual, right? In this structure where you're paying the building owner is getting paid to develop and implement a brand new plant, increasing the value of his facility. Very novel. This is the only monetary agreement between the parties, so that there's no confusion. The building owner agent will be required to furnish a monthly occupancy and consumption report to the developer to support these monthly billing activities. And that's typically done in the larger commercial arena by the building agents or property managers that have extensive monitoring and data facilities in those buildings, to where this is not a big lift. The information is there. The systems are there. Of course, the developer will also require a means to get paid for the monthly efficiency energy that's generated by the plant that he develops and installs. And this is accomplished through a long-term power purchase agreement with the retail energy provider. The retail energy provider will sign on for a 15-year agreement, if it's a 15-year contract term, to purchase the efficiency energy generated at the owner's facility, provided it is certified by CEFA. So next, let's move to the top of the figure to cover off the retail energy provider and the building owner. So an energy supply agreement is entered into between the owner and the retail energy provider. In this agreement, the owner will sign up for a fixed unit price per kWh for efficiency energy metered. In this example, it's a fixed unit price. That may not be in every example in every jurisdiction. They sign up for that fixed unit price, but the energy needs to be metered, certified, and supplied by the energy supplier for the life of the contract. If the network energy is also provided by the efficiency energy supplier, as contemplated in the, or the retail energy provider, as contemplated in this presentation, then the retail energy provider will send monthly invoices to the owner agent, separating the network energy, the rooftop solar, and the efficiency energy on their own line item billings or billing line items. The owner's agent will facilitate payment for the combined energy bill and make payment to the retail energy provider, who in turn makes payment to the developer on the terms of the PPA. Now, it's important to note that this is this concept was designed specifically for a opportunity in Dublin, in Ireland, and there may be nuances or variances to the setup and the process in other jurisdictions, depending on what that operating framework is in that particular country or jurisdiction. And lastly, you've got the CEFA certification data and process flows that are still really, they're under review, and as such are really not ready. This is the level of detail that we can go to here today. However, the flow will not deviate significantly from what is presented here. More to come, and we will be. I know that GearUP, as this is our official launch, a big part of today is to get people to participate in the market, so that we can continue to build on what's been developed. Next slide. So next, I'm going to walk, and I won't belabor this. Next, we'll walk you through the proposed pilot project outline, just so that you can see it through a practical lens. The GearUP framework is composed of interrelated actors, and they're each bound by distinct responsibilities and risk-sharing instruments. So the following agreements define these relationships and the respective parties' obligations, and they fall into three buckets. You have the pre-agreement bucket, which is step 1 and step 2, which includes the owner application, the preliminary energy analysis, and a letter of intent. And that letter of intent at step 2 is the first go, no go gate in any project development. Next stage is the development stage, which is step 3 and 4, which includes the investment grade audit, which in turn feeds the M&V baseline plan development and firms up the project scope, cost, and the efficiency energy generation potential, all of which feeds the project financial model. So once these are complete and the results are mutually acceptable, you're in a position to draft the energy tenant agreement and the energy supply agreement. This is the second go, no gate. Go, no go gate, excuse me. Lastly, you step to the operational stage where final numbers are established, the PPA is finalized, and ETAs and ESAs are signed. This is followed by your, obviously, your project commissioning and performance period management for the life of the contract. As you can see, the legal instruments required to operationalize the approach are, there are 4. The letter of intent. The letter of intent is an authorization from the owner agent to the developer to proceed with the investment grade audit. The IGA is a prerequisite to developing the energy tenant agreement, which is the second, the energy supply agreement, which is the third, and the PPA, which is the power purchase agreement. It develops the values and key inputs for both the measurement and verification plan and the initial project financial model. This is a very, very key step, and the letter of intent is meant to bring the owner on board to understand that it's a significant investment that's been undertaken by developer on their behalf, and they have to pay. The owner agent shall have no payment obligation at the time of the execution of this agreement, but acknowledges that the IGA fee shall be incorporated into the developer's project costs in the event that the energy tenant agreement proceeds. Next is the energy tenant agreement. And the energy tenant agreement outlines the proposed efficiency energy interventions and the agreed energy baseline by which all future energy consumption will be measured against in order to calculate the monthly avoided energy use, or efficiency energy. Both the IGA and the measurement and verification plan are based on IPMV option C, and included as an annex to the energy tenant agreement. In return for signing the long-term energy tenant agreement, the owner will receive monthly tenant rental payments from the developer, and the energy efficiency energy developer will receive exclusive energy tenant rights to harvest, develop, transact, own, and operate efficiency energy interventions in the owner's facility under the terms of the agreement. We're nearly there. Lastly is the energy supply agreement, which is entered into between the building owner and the retail energy provider. The building owner agrees to pay the retail energy provider an agreed fixed cost, cents per kWh, for the metered and certified efficiency energy, kWh, for the duration of the agreement. So I won't go any further with these instruments, and there's a lot further that we can go as you get into all of the risks and how they're mitigated and how they're managed, as there's simply not enough time to really dig in on this call. So for those interested in participating in future workshops, please let us know, and we will do our best to accommodate. And we certainly will be putting notices out there to folks to get engaged and get involved with us. And then lastly, Lena, so look, as you can tell from my introduction here, that you might think, why would we do all this? It really seems like a lot of bother. And maybe there's an easier way. But in a nutshell, the benefits are compelling to stakeholders. Very, very compelling. And for us to really take what we know today as energy efficiency and make it a commodity to support long-term investment and comprehensive retrofits in the built environment, that is the only way that we will take fossil fuels out of the equation. You will not do it with single measure interventions. So the building owners, the benefits are higher yield post-intervention, no CapEx, if that's their desire. A lot of the Class A commercial buildings out there are, in a lot of cases, in a situation where they're approaching a stranded asset state. They certainly have an improved operating asset by the time they're done. They're contributing to significant reduction in CO2 reductions. Get rid of the oil, get rid of the gas. They have an energy infrastructure upgrade, and you have, in most cases, especially if you're doing a comprehensive retrofit with central plant and air economizers and the typical ventilation distribution or facilities distribution in these buildings, there's significant upgrade in tenant comfort. So beyond the building owners, and I think I mentioned this earlier, is the policymakers have a new lever to drive renovation and decarbonization at scale. The potential for indisputable off-balance sheet treatment is a huge boost to member states in their ability to crowd in private finance in the future. And it really, hopefully, will help us to shift the thinking in the market as it relates to renovation in our building stock. So efficiency energy and its application can truly move the needle in our ambitions. And with that, I will thank you very much, and I'll hand it back to Lena.
Thank you, John. I think it's really important that you gave this overview, because now we will move a bit to the closer look to the certification process and the introduction of the algorithm. Philip, the floor is yours.
Thanks, Lena. Good morning, everyone. It's great to finally be kind of talking to a broader group of people about what we've been doing and what our ambitions are around achieving this really interesting project. So look, GearUP, if you can flick to the first slide, GearUP exists to solve one of the most persistent challenges in energy efficiency, the credibility gap between projected and verified savings. Energy efficiency has historically lacked a trusted verification mechanism. While renewable energy and renewable generation is easily measured in kilowatt hours, avoided energy has been treated as an estimate rather than a measurable commodity. The GearUP algorithm, powered by the CIFA verification engine, closes this gap. It transforms raw metered consumption, weather data, and operational context into verified avoided energy measured in kilowatt hours using the principles of IPMVP, option C, and other standards. The algorithm performs continuous quarter-hourly and half-hourly regression analysis linking energy use to independent variables such as temperature, occupancy, and operational hours. These correlations are recalibrated dynamically to ensure the results remain valid even as conditions change over time. So every avoided kilowatt hour is independently certified, providing the confidence needed to treat energy efficiency as a quantifiable and tradable asset. The key innovation lies in embedding verification within the data pipeline itself, and not as a static after-the-fact audit, but as a live, traceable verification layer. This means lower transaction costs, elimination of subjective assumptions, and creation of a transparent chain of evidence that connects the meter directly to financial validation. In essence, the GearUP algorithm is not just a model, it is a measurement engine for trust, enabling efficiency to be measured, certified, and monetized with the same credibility as renewable generation is today. So having established what the algorithm does, if we move to the next slide, we now explore why the market needs it as we look to the structural and financial barriers it is designed to overcome. So, across Europe, the investment gap for energy efficiency is estimated at €2.7 trillion. Despite clear environmental and economic benefits, projects struggle to attract institutional finance. This is largely due to the absence of a consistent, certified, and transparent method for proving savings at scale. Current barriers include split incentives, as John alluded to earlier, between building owners and tenants, fragmented data collection, high transaction costs for measurement and verification, and the lack of long-term verified performance data sets. These structural inefficiencies make it difficult to aggregate projects, securitize outcomes, or establish the confidence levels needed for capital market participation. GearUP directly addresses these issues by creating a unified, measurable framework for what we define as efficiency energy. Through the CIFA algorithm, the certification process avoided energy becomes a verified tradable metric. This allows all stakeholders, building owners, tenants, financiers, energy efficiency developers, and regulators to operate with a shared language and quantifiable baseline. The framework aligns with the EED, the recast EPPD, and the CSRD, meeting the growing demand for evidence-based, outcome-orientated reporting. It also complements the EU taxonomy by turning compliance data into financial-grade performance evidence. In practical terms, GearUP creates a mechanism for deep retrofits to be financed based on measured performance rather than projected savings. It enables continuous performance assurance, reduced perceived risk, and unlocks lower costs of capital. Having framed the why, if we move to the next slide, we now explore the how, the internal mechanics of this CIFA algorithm and how it translates data into verified performance. So if we take a look at the data ingestion and validation, the algorithm receives continuous streams of quarter-hourly or half-hourly data consumption from MID certified meters, supplemented with weather data, heating degree days and cooling degree days, the occupancy of the building, or the operational data or influences in the building. The system provides automated QA and QC checks to validate completeness of data, the consistency of the data and the reliability, and any anomalies, gaps, or drift are immediately flagged for correction. This is carried out daily and reported on a monthly basis. The baseline modeling that we work to is constructed using the OLS regression to correlate consumption with independent variables. The model's robustness is tested using IPMVP and EVO standards, looking at the coefficient determination with values greater than 75%, the coefficient for variation in root mean square below 25%, and the normalized mean bias error within about plus or minus 5%, just to ensure that the longevity and adaptability of the formula and the corrections. When we look at the normalization and adjustment of the algorithm, actual consumption is normalized to equivalent baseline conditions using HDD and CDD and occupancy variables. When non-routine events occur, such as a major change in building use, they trigger scenario-based recalibration following IPMVP section 7.4 adjustment protocols. This would be typically a significant change in tenancy or operation or tenants moving out, etc. So there's a bunch of different things that might happen during the life of the contract. We've all seen this over the last 10 or 15 years, even as recently as the COVID pandemic. We needed to factor that into the equation. So the avoided energy calculation. Avoided energy is calculated as the difference between the adjusted baseline and actual metered use, and this is reported daily. The information is recorded daily, but it's reported monthly and annually to form the verified avoided energy data set. So when with verification embedded within the CIFA engine itself, the system autonomously evaluates performance against the baseline, applies statistical and diagnostic checks, and confirms compliance with IPMVP option C criteria. Once thresholds are satisfied, the engine generates a verified avoided energy output, or the GearUP certification, complete with diagnostics and audit traceability. In this way, CIFA transforms M&V from a periodic reporting exercise into a continuous verification process, with this automated standard-based approach drastically reducing bias and cost while providing full transparency across the performance life cycle. So with continuous measurement comes the need for rigorous control. And the next slide, if we can jump on, talks to the risk and the persistence over time that we've tried to account for and mitigate. So if we take each of these points, so we've had to look at all the different factors that might influence or cause problems in the delivery of what we're trying to achieve. So if we take a look at the meter error managed through MID meters, we're trying to avoid and ensure that the quality of data we receive is robust with a level of redundancy built in, and we can also provide annual calibration either remotely or on site. The meters will need to achieve and detect anomalies where we want to keep accuracy basically below 1% to meet that standard. For non-routine events, that engagement with the building owner's agent so that we are aware of what's happening in the building and we can adjust appropriately for headcount, occupancy or operational changes within the building. We have to account for model overfitting. So to prevent that, we use cross-validation, regularization and independent diagnostic review of the project. We avoid data drift through using high quality metering, but also we look at rolling baselines. We have some drift detection metrics, and the system for collecting the data and receiving the data will automatically check for any gaps, missing data, or any anomalies within the data baseline as it comes in. We also want to try and avoid baseline gaming, and this is prevented through algorithmic governance. We use multi-year baselines, transparent variable logging, and lock parameters set to eliminate subjective intervention and ensure reproducibility, such that we can't have people sandbagging potentially figures coming in or overestimating delivery from the project. We do have a risk around persistence of savings, so we do have to consider that to some of the points made earlier that I think Paolo brought it up. We might have people on site making changes to the, having a cooler in summer and warmer in winter, etc. So this is maintained through continuous verification and model recalibration. The efficiency energy developer, as a stakeholder and the ultimate person that needs to get paid for the efficiency energy, they will need to ensure this is happening. But our CIFA engine monitors this data drift and the operational change to ensure that ongoing performance remains referenced to the validated pre-intervention conditions, maintaining both traceability and accuracy over time. When it gets to operational governance, clearly defined roles for owners, ESCOs, verifiers are all aligned with the EVO Topic 8 on post-implementation responsibilities. So together, these mechanisms ensure that certified avoided energy maintains a plus or minus 1% meter accuracy, a less than 5% model uncertainty, and 95% statistical confidence, sufficient for use in long-term contracts and ESG disclosure. In short, the CIFA GearUP engine turns data integrity into financial integrity. It provides the assurance infrastructure necessary for avoided energy to be recognized as a secure, measurable, and tradable resource. So the next step to close is to use this system to scale investment and standardize certification, using or turning efficiency into an asset class with measurable social, environmental, and financial returns. Thanks, guys.
Thank you, Philip. Thank you, Philip, for your for this deep down into the technical perspectives and to see how digitalization can make performance more more important and more bankable. I would like to move now to our panel discussion. I know that there are quite a lot of questions also in the chat, so I would like also to offer more time also to our guests. So so we are moving now toward the panel discussion. We have with us, of course, except Paolo and Philip and John, we also have Eduardo Brunet, the Spain Director of Green Finance Institute. So I will just start with Paolo, and I would like to have your perspective, Paolo, on, I mean, you have just seen the GearUP project and also with the technical, let's say, parameters and the certification mechanism. How do you see, given the whole emphasis now on the ED and on the measurable savings and also the EPPD digitalization of smart metering, how do you see GearUP and its role as certification framework being, you know, being there as a verified outcome? And if we can also tick the box of Article 8 and 12 under the national implementation of ED. So.
Yeah, thank you Lina, thank you for these difficult questions, because I've been exposed for the first time to GearUP, and I must say that it's a fantastic tool, well-designed instrument that should allow more investment in efficiency. It seems that they pick up a lot of interesting technique from, let's say, more a technical side, so taking advantage of smart meters, communication. I assume that buildings will have sensors and IoT to track indoor-outdoor temperature, optimizing the system, and all technology which will result in additional savings and will communicate. And also very, very interesting Philip presentation on the technicalities of this advanced model verification system, which has a lot of intelligence inside, and assume the more intelligent system we'll have, the better will become, also using most probably artificial intelligence and machine learning. The problem is always, I think, how to convince the parties. We know this from many years of energy performance contracting and ESCO work, that is always difficult to sell it to a client. So, and this system is, I would say, is more evolved, very well better structured, but let's say from an external point of view, has a certain complexity. So I appreciate the value and maybe suggest to invite you how to market it to the market and test it at scale, because it really has a lot of potential. You say not just maybe for the financing and contracting part, but your Philip tool that you presented can be a resource also for company doing investment on their own, for energy company involved in white certificate scheme, for policymakers that needs to evaluate the energy efficiency program and policy that they can use all this data coming. I mean, we know that the fundamental question on efficiency, apart from trust and credibility that I mentioned at the beginning, and particularly from finances, is the magic baseline. And from a technical point, the more accurate is the baseline, the more we guarantee the energy saving are real savings and not just claim savings. So I would say congratulations. I assume there is a lot of work behind this, because from setting up this scheme that John presented and the MNV part Philip presented, it looks like you've done a lot of work and very valuable work. And my suggestion is really to disseminate this and try to convince more buildings to be the test bed for this innovative instrument, which has a lot of potential, as you say, also for policymakers. So I'm really pleased to be here today with you and learn about this instrument. Thank you so much.
Thank you, Paolo, for your for this, let's say, intro to our panel discussion. But I think what would be interesting is really to turn to John, and because of course, John is the mastermind behind GearUP, but he's also let's say, the pilot site leader of in Ireland. And how do you see, John, right now the barriers that building owners are facing? And how do you think, through the support of ESCOs, can GearUP help overcome them? So it's a dual question.
Okay. Well, I'm operating in one market, and so you need to gauge my my response, and I also want to address that GearUP was really inspired by MEETS in the US, and a lot of the basic premise and foundational approach was inspired by MEETS in the US. So I really want to make sure that we state that here today. That's number one. And in the case of in Ireland, for example, what we're seeing is, and this is very interesting, is that there's a tremendous amount of government spend in the form of incentives, and as a result, approaching a comprehensive retrofit and looking to bring in third-party finance and entering into a performance contract over time is really getting moved to the side, because the returns are for the individual investor to go in and selectively attack the renovation in specific buildings. It's just too great. So while incentives are absolutely key and part of the equation, there comes a point where the incentives hurt rather than help the scaling of the solution. And this is a very big deal. No one wants to really speak to this, but the facts of the matter are that this is a market issue, in a lot of markets. The second thing is that that too good to be true is the other big barrier that people face, in that, and this is part of the reason for GearUP is to move it away from this savings, this non-tangible event, and take it into a power purchase agreement, a PPA. And what's really nice about the PPA is that everyone understands a PPA. The pillar banks understand the PPAs, the financial institutions understand PPAs. When you start getting into option C, IPMV, shared savings, guaranteed savings, it's all too much. So what we're looking to do is to very much simplify it. All of the same criteria apply, except it's behind the scenes. It's not part of the marketing of the solution to the marketplace. So I would say they are probably two of the big barriers.
Okay, thank you. But I would like to bring Eduardo, because there was a question on financing in the chat I saw. But I think what is important is what are the benefits of this framework? And again, how can financial institutions, better align risk models to scale investments?
Yep. Thank you. Thank you very much for. I want to start saying that this GearUP is not for everyone. Okay, we're not going to be using this structure for financing windows changing and changing the boiler. We're talking here. We're putting a financial and a structure for deep retrofits for buildings that want to become smart, interoperability, interconnected to the grid. A BMS will be always part of the project. This is a structure that builds on very rich data gathering and energy management of the building. Okay, so it's complicated, but it's actually no more complicated of any other alternatives, be it an EPC, a pay for performance, an ESCO EPC. Actually, is simpler than any other alternative. Okay, so that's it looks complicated, but it's actually less complicated than any other alternative for building owner and ESCOs. Okay, you understand that negotiating an EPC contract can take you anything between 6 and 9 months at the least. Okay, so that's the first caveat. Looks complicated, it's less complicated. It's not for everyone. It's just for building owners that want to really build long-standing value on the management of the building. And for tenants also, who wants not only wants a better space, a better building, a better working conditions, better satisfaction for the workers, etc. Okay, so it's bringing value to the whole stakeholders here. From a financial point of view, there is one critical difference between any other alternatives. GearUP sits on the asset side of the building owner rather than liability side of the building owner. This is critical. Okay, so we bring in a solution, we bring in a possibility of compliance with the PDBD, and creating value of the market, creating a competitive advantage between any other buildings in the neighborhood, without needing to invest a dime. Actually, you're getting net operating income from the energy tenant agreement. So that's the first thing. Second thing, from a financial point of view, it's that we're building not a 3-year solution of bridge financing. We're building a 10, 15, 20-year framework that can actually be refinanced and securitized in the capital markets. This is what we're getting at the end, is a new financial asset class. And on the basics of that is definitely independent verification, very homogeneous analysis of data, and the pricing, and a correct pricing on the PPA. Everything at the end goes into the PPA, which is a very well-known contract, bankable. It's how renewables are basically financed, and we are actually financing an energy source, which is efficiency energy. We're not doing anything different. We're just mimicking what's out there in the market for renewables, but now for commercial buildings or public buildings or other buildings. Credit risk under the structure is better off than any other alternative in the market, because the counterparty of the PPA will be a very a better credit scoring counterparty than on much of the EPCs out there, no? So and we're talking about finance. One part of the finance is value. Okay, so it's and GearUP is actually embedding very different sources of value out of the structure that eventually will go into the PPA pricing, which means there will be more money available for the energy efficiency developer to do more things on the building. Why? If we have a BMS and we are going to be monitoring and managing a smart building, we could be tapping demand flexibility services for the grid. That's income for the project. Definitely, we are increasing the value of the property. That's another value. And in Spain, we changed the royal decree last month, a couple of months. And now valuation of buildings have to take into account the energy efficiency certificate of the building, meaning the sustainability will add anything between 12 to 70% higher value to the building. So asking to the question, Paulo, whether the efficiency energy was going to be priced as a energy supply, not necessarily. It's another energy source with its own value embedded into it. And it's on what the tenants spend is just 1%. So energy for the tenants is not critical, but what's more important is the space, comfort. That's critical for them. Obviously, location, etc. So yeah, it makes sense for buildings and owners, that the ones really to create long-lasting value. It makes a lot of sense for tenants that really want to be in a different building. And from a finance point of view, I think this can channel and catalyze lots of money, institutional money, that is not in the market yet. Finally, for ESCOs, the difference with these structures, they don't need to use the balance sheet. They can now do 100 projects without balance sheet, because they're not paying for that. That can be financed by a third party. This is really important here. I stop there.
Thank you so much, Eduardo. And I think what we are discussing, I think there are also some comments in the chat that I see more on the technical solution. So I will jump to Philip now. I mean, we have seen the whole technological aspect, let's say, of the tool, how it will work, how the data are functioning, and what is needed. So how do you see GearUP, giving added value also to tech providers? How can they tap into this model? How can we give them added value?
Yeah, it's a great question. I think by standardizing and centralizing the rule set and broadening the standard, so by broadening the standard, by making it transparent as to what is expected, by getting buy-in from the relevant stakeholders, be they financial institutions, to Eduardo's point, be they building owners in the real estate space, be they effectively tenants, all of the key stakeholders in the process, once the technology providers are aware of what's going in, they can prepare what they're presenting and bring to market to solve that or close that gap. I think we're trying to standardize trust, I guess, through transparency and a clear set of rules and parameters within which we should all work under. We're trying to prevent that information asymmetry in pre-works, works proposals, and post-work experience. By creating that single verification engine where everybody knows and understands and buys in at a contractual level as to the outcome of the project, we get rid of the challenge in settlement from an EPC, for example, where we might have a change in rules and we have to sit down around a table and negotiate what happened over the previous period or the future periods. We're clearing that runway by everybody buying into the journey. That will pose challenges, but I think we will take that lesson as we go through the conversations and develop the projects in the various jurisdictions we're working with. I think when you standardize verifications, you make projects easier to compare, you make them easier to bundle, you get to ultimately aggregate towards a larger financial pool, or it becomes more attractive for an institutional lender to get involved. I think where you have that standardized rule set, those technology providers will have to engage in less due diligence. We will have less dependence on bespoke M&V. It will all become a little bit easier. We won't have that that journey in advance of a project. We hope to turn 12 and 18-month project timelines into 6 and 9-month timelines. So we achieve greater results in a shorter period of time. We can maybe look at achieving a larger in-depth project delivery in that shorter period of time, as opposed to waiting for a budget release by a building owner or a funder over time, to where they might try and do one project this year, one project next year, and so on and so forth, with a 3 or 5 year goal to achieve everything. With that quicker period of delivery, we can see that happening in 6 or 9 months and getting all of the works done in that timely fashion. So helping us as a continent and an entity delivering on our goals and targets, both nationally and at a European level. I think, in short, what GearUP is doing is what the renewable sector achieved about a decade ago. It's turning complex technical data into trusted, standardized financial assets. And with transparency and an open rule set and a single point of independent verification that everybody is understanding and buying into, we can really unlock at scale capital flow and project delivery, I think, over time. Yeah.
Okay, that's quite interesting. I think we also have a few questions now. I just want to, before we discuss more about CIFA's role in this framework, there is a very interesting question that came up from the audience on whether GearUP has been incorporating non-energy benefits, like it is, for example, benefits of comfort, health, resilience, operational health system, the whole non-energy benefits. Maybe someone of you can also reply to that question.
Oh, sorry. Say it again, Lena.
So there is a question from the audience, whether GearUP is taking into consideration non-energy benefits. So aside, the direct energy and cost savings, like, for example, comfort, health, and these types of areas.
I think that the whole structure takes in account all the value stream coming from retrofit beyond pure savings. Okay, this is really important to understand. We will not only valuing euros per kilowatt saved. We are transacting efficiency energy as a source, and that source happened to encompass and embody lots of value. It's a non-carbon fuel. It's ready disposable. Doesn't need cables, etc., etc. No, so the pricing on that kilowatt will definitely, we understand, will encompass some of that value. Okay, so that's for the financial model to determine, obviously, and negotiate between the parties. Now, the impact, the monetary impact of recognizing that value is minimal for the parties involved. But on a 20-year or 15-year contract, we're talking about probably a couple of millions more of potential capex investment in that building. That's what we try to achieve.
Yes, John?
Just to add to what Eduardo was saying there, the answer to the question really is in addition is that we're not factoring those other benefits into the financial model today as it relates to pricing the cost of efficiency and the price of efficiency energy. But we are certainly highlighting, and when you're working with building owners and clients, they understand the value. There's a huge, big value from a valuation standpoint to the asset from the owner. We just haven't developed that far as we haven't moved the conversation far enough along. There may be a point where you could include it, but these other values, the valuation pickups, but that's really going to depend on the building owners about whether they want to share that or whether they want to see that in a financial model. My sense is they won't. And so right now, I think it's pretty clean. We're not using the soft benefits in the model.
Yes, Paolo?
Thank you. I would like to pick something that I think Eduardo said. In tomorrow electricity system, capacity and flexibility may be more important than energy. So I think the first thing that could be integrated is really demand flexibility, demand response. We know that in Spain, most probably in summer, electricity prices are very low during the day, but so maybe you can recharge batteries, pre-cooled, all these kind of options that can be embedded in the building together with efficiency, so making really the building part of the energy system. This is my first suggestion. Second is the carbon value, and I've been advocating for almost 20 years that energy efficiency should be enabled to participate in carbon market. Either offset, but also real allowances, because it's a way, most probably with ETS2, that may become more evident, and suppliers should buy carbon reduction or supply fossil fuels from their clients, so it's not a revenue streams. And the last final comment is that again, with your system, you have invented the megawatt meter. That is something that has been always very much dream of from all the efficiency implementer, and so also the metering system is there with this engine that Philip has presented, and should be served as we have finally invented and proved that it's working.
Okay, thank you. I think we have another question that is, I think it's asked by two of our audience. So in a building, part of the savings are attributable to tenants, but they were not present in the contractual scheme. How do you plan to embark those savings that are attributable to tenants?
I think that's a difficult one. The modeling that we've done on the project to date, Lena, has been based on the principle that the building has multiple main grid meter points, or MPRNs, and so the tenants would be independently billed for their electricity within their curtilage, I suppose, or their space within the building. And we're affecting change at a broader building level for common supplies that would be effectively paid for through the service charge. while there will be tenant savings locally, you would imagine, we have explored deep retrofits effectively within the tenant domain that the tenant has control over the cost of, I suppose, directly through their own operations. We have a couple of different variations where we've had to consider that, but the projects that we've been working towards to date for delivery have been focusing on central plant for common area supplies sitting on the landlord side of the bill. So it's not that it has been avoided in the model, it's been sidelined in respect to delivery of the first set of pilots, I suppose.
Yeah. Okay. I would like to, I do not know whether there are any other questions that I have not picked up. If not, please raise your hands if you think that you want to. I think there is. Okay, I think there is a final question before we move to the final section. It says, do you anticipate that service maintenance contractors shift from plant maintenance service to outcome-based?
Yeah, I absolutely do think that the service and maintenance-based contractors will shift to outcome-based. I think, in fact, in a lot of markets, they've already made that shift. In a world where energy service companies are more prominent in delivering long-term outcome-based contracts, then by virtue of the contract design, companies that service and maintain that, which is critical to supporting the expected cash flows from those investments, that will be a critical piece of any service and maintenance framework in the future. So yes, indeed, I would think that the world's already moving there, and in the future, as we get more penetration in the markets with performance-based contracts, that it will have to move there.
Okay, I have a final question, and that is for you, John, again. I mean, now you need to put your other hat, the hat of a chairman of CIFA. What role do you see CIFA playing as a neutral and independent certification body? Because you hinted at it already, so I would really like to understand how do you see that neutrality, ensuring market credibility, and a bit more trust for investors, let's say.
Yeah, well, obviously, as both chairman and also as a participant in this particular project, we expect CIFA to play a central role in the future of the validation, the certification of efficiency energy. What makes CIFA, I think, an ideal candidate is, look, one, it's not for profit. That's really important, right? We don't make a dime on the back of anyone else here. This is simply an association that's making an investment on behalf of industry, and not one piece of industry, not a silo. We have many different associations. We've got solar, we've got wind. CIFA is not set up like that. CIFA is set up with all the stakeholders sitting at the table. So, what that brings to the conversation, I talked a little bit about this non-silo approach, is really, getting the market involved and making them part of the conversation to develop a key product or service that will make the business of measurement and verification cost-effective, accessible, and trustworthy. And I think that CIFA, by virtue of who they are and what the makeup of CIFA is, can absolutely do that.
So thank you, John. I think we are moving to our, let's say, to our last part of our concluding remarks. I just wanted to inform the audience that we will be providing our presentations in our website. There will also be the live recording also available for those who want to really look back and really digest the concept. We are here to answer your questions, so please get in contact with us. If you have any questions, we are more than happy to discuss further with you your ideas and how you see yourself being involved in this concept. From our side, we would really like to continue this conversation ongoing. We would really like to see ourselves launching specific targeted webinars with respect to ESCOs, to technological providers, financial institutions, and most importantly, the building owners, because this is exactly, I think, what it would be important to do. And of course, and saying that, I see that John has a final remark. Yes, John.
I do. Sorry, Lena. I just wanted to, because we didn't bring this up, is that really want to put it out there to folks that are on the call and listening, that we really welcome your participation in this, and to that, if you're out there and you're working yourself or with folks that are pulling together opportunities that you think might fit into this, it doesn't matter where you're at. We understand that Spain and Ireland are pilots, but if you've got something that you think is interesting, that you might be interested in, just reach out to us, contact us, and we'll get involved.
Good. And with that, we are on time. I want to thank Paolo, John, Eduardo, and Philip for their insights, and we'll see you again. Thank you very much for joining.
Thank you.